Hey, welcome back to Ryan Makes Sense. Hope you're doing well. Today we're going to be looking at Palo Alto Networks, ticker symbol PANW. We are going to determine if a $318 stock price is fair or if the stock should be overvalued, undervalued. They are reporting earnings today after the bell. We're going to be looking at near-term gaps to the upside and the downside. We're going to see what institutions and hedge funds are doing and just look at a little bit of the balance sheet as well and determining what the price of the stock could be. Without further ado, let's go ahead and jump on in. All right, so looking at Palo Alto Networks, it does have a gap from 330 to about 359. So if the earnings are going to be good, I could see this gapping up to fill that gap and continuing an upward move, or it could spike to close the gap and then head the opposite way. It really just depends on how the earnings go, revs, EPS, and guidance. To the downside, we do have a gap to fill at the $226 range. That would be about a 30% reduction, no, 30 plus. That would take $100 off the stock price, basically 35 to 40% reduction from here. Earnings would have to be pretty bad. So just going down looking here, this is beautiful. This is what we love to see. Just perfect stair step up. Shares outstanding went from 290 million back in 2019 to 308 million in 2023. That is an 18 million share difference over time. EPS clear reversal. You have your big U going up, and now it's up and to the right, hopefully. All right. And looking at the price to earnings, it is expensive, and the forward price to earnings is also expensive. We need to have some pretty strong results today. We're going to look at the bigger picture, and I have charted this one out before, and you can tell the stock is literally butting heads with this support line that goes all the way back to the beginning of 2023. This could be resistance or it could be support depending on how well earnings go. If earnings are positive and the stock continues up, I could see the stock going higher and then for the month of June coming back down and testing 324. However, if earnings are bad, we could see the stock rescind from here and potentially come back down and test 287. And then we also do have support at 263. And then we do have the gap at 219 that I was talking about before. So that's some bull and bear opinions there. Again, my price targets are going to be to the upside about 350. To the downside, if we do go down, my near target is going to be 281 and then 258. So those are my bull and my bear case scenarios. So we'll see how it goes. And looking at the strength of the stock, it's still in the favor of the bulls. If strong earnings and we get a surge of buying, I could see this going higher. The momentum looks like it was on a downtrend for about 3 months there, but it actually has ticked back up, signaling momentum to keep going to the upside. The money flow looks like it has been going up for about a year, taking a breather for the last 4 or 5 months. Could it go higher? Money flow keep going higher? It could. This could just be a break before it reverses up. And the relative momentum indicator says this is hotter than hot. We could expect this to continue. The stock has been trading hotter than hot for about 4 years now. So, well, 3.5. So that's my opinion on our long-term technicals there. What I want to do now is do a calculation to see if the stock price of 318 is reasonable. So what I'm going to do is calculate our market cap, income, sales, account for our cash, the debt, and divide it by the shares float. and go from there. So again, Palo Alto Networks is profitable and they have 74% gross margins, which is absolutely insane. Just incredible. So what I'm going to do is I'm going to bust out my calculator. And this is a calculation that goes back when I worked at a micro cap company. We had financial regulators, resources come in and basically said every $100 million in sales was equivalent to a $1 stock. And I've kind of incorporated the market cap to also be included because once you get over 1 billion, that's when big money can really affect the stock to the up or the downside. This is 102 billion, so this is gonna be quite the stock calculation. So anyway, they have 102 billion 700 million in market cap, which is fantastic. Plus they have 2 billion 280 million in income. It's fantastic. Plus they do 7 billion 530 million in sales. I could see Palo Alto Networks producing a dividend in the next 5 years or earlier. Although I would like that money to keep going into the stock because it's going to continue to make it volatile. Adding the dividend would make it less volatile, more steady income producing, etc. Depending on how big the dividend is, but that's only hypotheticals. Let's stop talking about that. Okay. We're going to look at our quarterly and we're going to go to the balance sheet. They do have 1,782,500,000 in cash. Total debt is not listed. Do they have debt? Oh, it's right here. Total debt is only 1 billion minus 1,821,800,000. Not bad, honestly. Okay, and just really quickly, total assets is 18.2 billion. Total liabilities is 13.9 billion. That's about a 4.3, yeah, $4.3 billion buffer. That's gorgeous. Okay, and we're gonna go and take this divided by 319,080,000. So this is saying a stock price of $352. Does any analyst have that? We have 402, 400, 300, 300 with the average target price of 335. So my target of 352 would put us right near all-time highs. I don't think that's out of the question, in my honest opinion. And based on this, and then if we do this divided by, or wait, 318 divided by 352. I had that the wrong way. A 10% to the upside. I don't know if I'm doing my calculation here. I'm not. So about, yeah, 352 from 318 is about $32, which is about 10% to the upside. But I do own Palo Alto long in my my IRA and my long-term portfolio. So I guess I'm some bias here, but I mean my calculation is unbiased because it's raw. It's what I do. Okay, so we figured out our bull bear case stock prices to the upside and the downside. We looked at our calculation and my calculation does point to the upside here. We looked at the long-term technicals. It does look favorable for the bulls. And let's look at institutions and hedge funds. So old data says institutions own 78%. And I say it's old data because FinViz does not update as often as FinTel. So remember 7894, that is old. Our new data is, drumroll, it doesn't say. So we're going to have to manually calculate 276 million shares. Remember 276,681. 276,681,000 million divided by 319,080,000. 86% times 100. So institutions own 86%. That is up eight about 8%, which is good. Institutions are adding. Let's see what the Vanguard and BlackRocks are doing. Let's move this. Vanguard added 8 million shares. BlackRock added 7 million shares. And that was earlier this year, several months, well, 3 to 4 months ago. So that's great. And if you want to check on your own and see other individual companies, you can go down here and see a lot of data. I don't need to see that. I can see Vanguard and BlackRock have added to their position. They own the world basically. So institutions, hedge funds are buying. My personal calculation says this is the upside. Technicals do show favorability to the bulls. I don't know if favorability is a word. What are insiders doing? Probably selling options. Yeah. So leaked claret sold, like, scratches that out. 121 scratches that out. Nurzik sold $10 million worth. Nice. Lee again. That washes out. Lee washes out. And then we got some nice selling here. So no real red flags on the owners or the insider side. I would like to see some purchases rather than baked in stock units. So again, the stock price is not low enough for insiders to really take advantage. I think if we saw a crash type scenario going back to 2019, 2020, and the stock did get to all-time lows, let's see. Yeah, the stock, I mean, went down to 40 bucks. Wow. And it's almost 10x in 4 years. Insane. All right. And yeah, I am optimistic on Palo Alto because cybersecurity, everything is tech nowadays. I mean, tomato, tomato. If you made it this far, consider subscribing. If you are in this one long, good luck. If you are in this one short, good luck. I own this one long to the upside, but it's something I'm going to hold for years, so I don't really care if there's movement to the downside. If we did get down to the 200, 220 level, like where that gap is, I would obviously be buying. At these levels, I'm just dollar cost averaging every week, and it's getting a fraction of that. So without further ado, good luck. Have a great week. Talk to you soon. Adios.